Well, welcome back. This is Lesson 6 on the 7 Steps to Trading Success video series. I know you've seen a couple of our live day trading videos in between some of these areas, but what we want to do now is continue on with our lessons. Again, we've got the CFTC required notice. Please read that. You've read it many times. Just learn to understand it. What I want to talk about today is pulling a trigger. Pulling a trigger comes from basically believing in the system you're trading. And in order to build that belief, you have to have tested the system for yourself. That may even mean testing other indicators to make sure that the ones we provided are the best that you can find. Some people like to add vertical other systems to our system. I don't recommend that, but you can compare and put your templates side by side with ours. The other thing is you need to prove your belief in the system through practice that you have consistently achieved. We like to get people to a 60% winning percentage with at least a 2-to-1 win-to-loss ratio. You should do that both with the SimBroker and Ensign and your broker SimBroker. But there is a big difference between practice and real time, and that is emotion. It will wipe you out if you're not prepared for it, because all of a sudden, we're going to talk a little bit about this later, you've got emotion involved, and it has to do with your understanding of how money works. The other thing that helps you pull the trigger is that you understand your indicators and the signals and what they mean and why they are set up that way, and you've spent time studying that so you know what they're really doing for you, and you understand and know your setups. Now your setups, just generally we talk about the 1, 2, 3 system. You've got to have some method that is almost an algorithm that is automatic from your standpoint. And finally, you've got to know your money management system. You've got to know your rules. You've got to not violate them. So you've got to be willing to stick by what you've set up, and hopefully you've tested that in the beginning practicing as well. Now, we are trading on probabilities. There's a probability that if you get these 3 signals, you've got about a 70 to 75%, even 80% directional flow. But no one can predict the future. You can have a flash crash. You can have all kinds of things happen. So you've got to be prepared for that. You've got to know what the odds are. The odds in football, the odds in all these different games basically change as time changes, and so all you can do is know that when you step up to the batter's box, there's odds that this pitcher is a side armor or a knuckleballer or a curve thrower or whatever, and you've got to be prepared to trade based on that probability. Now, this is where the fear zone comes in. And overcoming fear of the unknown is one of the greatest things you can accomplish in your life. It'll pay dividends everywhere else across the spectrum of what you do. And basically you overcome fear through familiarity. Remember when you first started to drive, how fearful, herky-jerky you were, and how you held the steering wheel too tight. A lot of traders hold the steering wheel too tight when they're first trading. But you overcome that through being familiar with the process and the rules and whatever. You need to internalize all the trading rules so things are in automatic, and the same thing with the money management. Now, there are studies that show you can hardwire your brain with over 10,000 repetitions, and that's what's called muscle memory for athletes like golfers, tennis players, people like that. And so what you want to do is get into automated trading. Now, what that means is I liken this to playing ping pong. A lot of people start ping pong and they dink it over, bonk, 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 but within a week or two, they're standing 6 feet behind the table giving it a forehand or a backhand rip. And that's because you've learned the process and you've done it enough that it becomes automatic. The other thing you need to learn to do is learn when to trade on or not to trade. And we talk a lot about that in our system. One of the times is when our moving averages are flat. We generally do not trade unless there's at least a 5-point range of the price threading a needle around those. The other thing I think is most important that helps you the most with pulling a trigger is to know how money works and how it works for you. So I would ask you, what is your belief about money? There are religious prejudices, ethnic prejudices, all kinds of different things that we get from our parents, from the environment, from the press, from the government, from everybody, that if your belief about money is not a positive one, you'll have a great deal of trouble trying to trade. Now, the other question I always ask people, and about 80% of the traders I ask this question when they're looking at buying my course, is why are you trading? Is it for money? Is it for revenge? Is it to show someone else what's going on? Is it for pride? Is it for fun? You've got to figure this out. If it's not for money, I'll give you a hint, you shouldn't be trading. If it's for survival, you really should not be trading. The other thing is, what does money mean to you? Is it just a way to keep track of how well you're doing? Is it for a specific need, like education for your kids, or a new home, or health care for your family? Money basically is energy, and it flows by the path of least resistance. If you don't know how to keep it, once you make it, it goes right out the bottom of the bucket as fast as you put it in. So, try to figure out what money means to you and why you're trading. And the other thing is, money elicits a tremendous amount of fear in people. And you want to figure out how it elicits fear in you. How do you handle a fear of loss? Let's say you have a $10,000 account that goes to zero. Are you afraid of that loss, or could you give a rip? I mean, are you worth a lot of money, or does it not even matter to you? But the most important, I think, the biggest problem for most people is fear of success. What if you become a really good trader and you move out of your economic class? Many people get held back by something called a set point. They have a vision of where they should be and how they should live and how much money they should make, and they start making a lot of money. And when that happens with the fear of success, almost always they'll give it all back. So you need to figure out these two aspects of how money elicits fear in you. And we cover some of the things on how to overcome those and give you actually psychological tests you can give yourself in the course that you can determine how you're probably going to react in this case. Well, the final part of this is, how do you solve problems that you come up with in pulling a trigger? Are you greedy and pulling a trigger too often? I have a friend who has developed an analysis program for himself, and he started out making 30, 40 trades a day. He's now down to 2 or 3 trades a day. He makes more money in those 2 or 3 trades than he used to in the 40. He went from scalping to being more patient and working on a bigger win-to-loss ratio. So one thing you should ask yourself when you're actually live trading is, when should you stop trading? We have rules for that. I'll give you a hint. It's 2 losses in a row, you should quit for the day. 2 days losers in a row, you should quit for the week and go back to the drawing board and figure out what's going on. So the other question is, have you practiced enough? A lot of people get this course, they see the settings, they say, man, those are really easy, I can take that, I can make money. And I will tell you, in 10 years and 1,000 traders that I've trained and coached, only 1 or 2 have done it in a week, and most people take approximately a month. You shouldn't try to rush this practice. Okay, and have you practiced enough? If you just jump right in without practicing, I can almost guarantee you're going to lose money right off the bat. A lot of people say, am I missing something along the way? Well, I would suggest you go back and reread the course a few times and rewatch the videos. I actually reread my own course every now and then to make sure I'm not getting off the beam. But this "are you missing something" question is the search for the Holy Grail. What else can I add? How can I tweak this? How can I do that? Don't get into that mode. You will find it an endless road to a bottomless pit. Finally, there's a question, how do you fix your psyche? Well, know thyself is probably the most important thing. I knew that I was always jumping the gun, I was always getting in easy, and I was always thinking that I was smarter than the market. Doesn't work. Person that taught me made money up to $1 million on a 10,000 account for over 30 years and busted out the final year when he stopped following his own system and started following his gut. Okay, so lesson learned there. And finally, you got to ask yourself, when do you need to take a break? We all get stale, our biorhythms go crazy, all kinds of different things happen. You've got to give yourself a vacation from this. It's very intense. We don't recommend trading more than 90 minutes a day and more than 3 to 4 days a week. And about once a month, we take a week off. So that is some good advice from somebody who's been doing this since 1995. So what's next? Well, we're going to cover trading as a business and how to set your business up properly, both to protect you, your accounts, and to protect you from the tax man. So this is Bill McCready for Futures Trading Secrets. We hope this has been helpful as part of your lesson.